The Vee Trades technical analysis course is now live. Learn to read the chart the right way to prevent costly mistakes. Click the link below to start training now. What's up, traders? This is Vee Trades, and today I will be doing a technical analysis breakdown for the Seng index with the ticker symbol HSI. I will first go over what I see on the daily chart and finish the video off with the weekly chart. So here we have the daily chart for HSI. Looks like since last week I did my analysis when prices were at the 20,073 level. Prices slightly went up, got rejected, and then we sold off for most of the rest of the week. So what it looks like prices are doing now. So it looks like it's looking like it wants to drop lower, and I'll go over the reasons why. So basically prices were previously inside of this uptrend right over here. So we had this huge uptrend, or in this case this channel. Prices broke the channel, made two legs up. Two pushes up is what you expect. That's textbook technical analysis. So two legs up, found resistance right at this prior resistance, and then sold off. So that was probably the signal for longs to get out of the position. And then from there, prices went inside of a downtrend. And again, like I said before, if we had a channel and we get a break, we usually get two pushes in the towards the previous extreme. So in this case, uptrend had a break, two pushes up. In this case, this downtrend had a break. Now we're getting two pushes down. So this is the first push down. Prices retraced, and now we are trying. The bears are trying to reach this measurement target at the 18,752 level. So it looks like in the past, I had probably had my support a little bit higher. I was thinking maybe the support was right about here, but it actually fits much better a little bit lower, right around this, very close to the $19,000 level. So that's what it looks like. That's where the strong support is at. And that's where it coincides with the measurement target. So basically, the bears are trying to reach this measurement target, and they're going to try one more time. So this was one drop right here. Prices failed to reach it. We pulled back, and now prices are in the second attempt. And it's targeting right at that $19,000 level. So basically, after a channel break, we expect two pushes in the previous extreme direction. This is the first push. Second push will be met with two attempts. We just saw the first attempt to reach the second push, and right now we are in the last attempt to reach the second push. So there's a very good chance that this is probably the bottom for this down move, and we'll see if we can get a bounce up higher, because prices are pretty much just trading sideways. Even though we see this big swings up and down, basically prices are pretty much back at the same price as it was last year. So if you bought, in May of 2022, you're pretty much just at break even. So we do see these big swings up and down, but HSI is just pretty much trading sideways for the most part. So that's what it looks like it's trying to do. I'm going to be expecting the second leg to be met. It looks like it can be dropping and breaking out of this support right over here. I'll draw it with the trend line. So there is this support right here, but it looks like since we're right back at it from getting rejected from that EMA, it looks like we could potentially break it, fill in this gap, maybe bounce off this level, and then maybe come back up to the highs where the resistance is at. So that's what it looks like it's setting up to do. Let's go over the weekly chart to wrap it all up. So here's the weekly chart for HSI, and we had this massive downtrend in play. I'll show you guys that right now. We had this massive downtrend in play. Prices had an overshoot of the downtrend, which can lead to a reversal or a breakout on the opposite side, which we did get. We got the breakout on the opposite side. Right now, prices is just trying to find its footing right around this $19,000 level of strong support, and right around this 22,500 level is strong resistance. So basically, after a channel break, we expect two pushes towards the previous extreme. So in this case, we just saw one push lower, and currently prices look to be in the formation of the second push. So we'll see if they can reach it or not. It's a better sign that they don't, because then that shows bullish strength. They did not allow the bears to reach this measured target. We can bounce at that support at that $19,000 level and maybe get another large leg up. So we'll see if that occurs. Eventually this downtrend will probably come to an end, because if you look in the past, HSI is not really a buy and hold index because of these very large up and down swings. It's not like a nice little smooth uptrend where you can just buy the dips and hold on. This is basically a cyclical index, meaning like you try to see where you can find the bottom, you sell when it gets overextended, you buy when it gets really low, you sell when it gets overextended. So you kind of rinse and repeat. Right over here, people sold. I think the big traders are still staying out of this index. because we can still continue to drop lower, but eventually they'll probably come back in maybe somewhere around here, and they'll probably ride the next cycle up. So that's what it looks like HSI is, basically a cyclical index. Even in the past, we can go back, into the last century, from 94 to about 02, 03 was a very choppy looking market, and then there was a nice bull trend from 03 to 07, so a 4-year hold right there, but then it collapsed, and then again it started going up, then it collapsed again. So very cyclical, and that's why it's a little bit, it's good to be optimistic to say that, hey, there's a good chance, since we just saw the big drop, in the future there's a good chance that we see a move up higher. So we'll see if that occurs, but as right now, we'll take it day by day, week by week, and I'll slowly give you guys updates. This is Vee Trades, and thank you for your time.